Good Wednesday morning, Market Chameleons. Everyone join us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show. Before we get started, please take a look at the shared disclaimer. Be aware that neither Market Chameleon, Dimitri, or myself are registered investment advisors or a broker dealer. If you're searching for investment advice, please reach out to a licensed professional. This show, as always, is for informational purposes only concerning Market Chameleon tools and products. With that, D, you ready to go this morning?
Yep. Good morning, everyone. So let's share my screen here. If you're joining us for the first time, Will and I, we do these shows in the morning to try to help answer questions you may have about the Market Chameleon tools, the data, or the analytics. If you have a question, type it into that live chat on YouTube. We'll keep an eye on it. He'll let me know when they come in and read them back to me. And to give you a couple minutes to put those questions in, we're going to start out looking at our pre-market report to see what type of insights we could get on the pre-market trading, and then we will move on to our questions. So let's start out. We're on the pre-market report here, and you see this calendar view up top. And we also see summary statistics for each particular day of what occurred in pre-market hours. The idea there is to compare today's activity to the most recent history to see if you could spot anything unusual or trend. Let's look at today's activity, August 14th. And you could see so far, we have 581 stocks trading higher in the pre-market, 250 stocks trading lower. We have 267 million shares trading on up volume, 57 million shares on down volume. We also have $6.9 billion worth of stock trading higher, $794 million worth of stock trading lower. So from that perspective, it looks like we are lining up for a more bullish, or there's a bullish lean in a pre-market trading. Let's look at it from a couple more perspectives, then we'll move on to our questions. So I'm going to slide down here a little bit. And now we get this more granular view of what's going on in the pre-market hours. We see stock symbols with price changes and volume. We also have our most active stocks, our biggest percentage gainers, and our biggest percentage decliners. And down here, we see we have 81 stocks that made it onto our biggest percentage gainers list, and 32 stocks made it onto our biggest decliners list. So that also points to a more bullish bias in pre-market trading. So to make it onto this list, we set certain thresholds for trading activity because stocks in the pre-market could have very low volume, low liquidity. If it meets that threshold, it can make it onto this list. And that will include stocks that are small cap stocks. It will include securities such as ETFs, closed-end funds. It could be an inverse ETF that moves in the opposite direction of the underlying stock. And to narrow down this list further, we could use our filters above, up here. I'm going to start out with this in my watch list filter. This allows you to screen this report by stocks that you saved in your watch list. I'm going to use this in ETF filter in our example, which has a similar concept that I'll show you right now. And when you click on it, you get these different ETFs to select from. We're going to go ahead and pick the SPY ETF, which is the S&P 500 ETF. And when you do that, you see that the list below got filtered by stocks that are holdings in the SPY ETF. It's kind of like you created a watch list of S&P 500 companies, right? Because that's what the SPY ETF is. And here we see there are 16 stocks that made it onto the biggest percentage gainers list, 2 on the decliners. And that also indicates a slightly more bullish lean in the pre-market trading from this perspective. So we gave it a couple minutes. Will, if we have a question, I'll start taking them now.
We had one question pop up this morning from Santa, who actually asked the questions yesterday about looking at trades, how they performed in the past.
Okay.
He said, question, imagine that I'm looking at potentially day trading SPY. Is there a way in the platform to find the range of trading in the day or the liquidity zones? And I wasn't sure if he's asking about trading the ETF or the options or even the futures, which we don't have anything on the futures. But anyways, that was the question. I just thought I'd mention it to you.
Okay. All right. No, thank you for the question. So I think he mentioned SPY.
Yeah.
Um,
Can I put up my
it-
share screen real quick before you get started? Is that okay?
yeah.
Just sharing the disclaimer one more time for everyone to take a look at. All right, D, you can start.
Let me.
Take over the screen.
Yep. So I'm going to come down here to SPY, and I think the question was, if you're looking at SPY and you want to get a sense of the range that it could trade in a day, right? Something like that, like where, what is the range from yesterday's close, let's say. Now, of course, it doesn't have to be a fixed range. There's no fixed number that we could say it's going to trade up or down 1%, because we don't know. Nobody knows until it happens. It could be anything. It could be 1%. It could be 2%. It could be 10%. We don't know. But without knowing, can we use data to get an estimated range, based on either history or based on where the markets are implying, right? Like, where do we think the range is? So to narrow down, right? We're trying to narrow down the potential or possibilities. We're not going to get it exact. Nobody knows the exact number until it happens. But we're trying to narrow down to get an estimate, like where do we think it's likely going to move around, between 1%, 2%, 10%. So there are a couple, different ways we could try to estimate that. Yes, and think of it as like, if you're trying to estimate what is the two teams are going to play basketball, and you're trying to estimate, well, what's the combination of points at the end? Well, there's no way of knowing, but we see estimates all the time, right? Combined score 200, 210, 220, whatever it is. So when we look at, let's say, SPY, and we see, okay, it's $542. Where do we expect the stock to fluctuate today? And within what range, what band, what liquidity band is the question. And that's a good question, because usually when we look at trading, and we look at it from a statistical point of view. We don't know exactly things, but we're trying to look at the probability or the possibility of something happening. What we could say, can it go to zero? Probably not. It's not going to happen in SPY, because that's never happened before, and it's that unlikely to happen. 500 stocks all go to zero. So
yeah, well, that would be not good for everyone.
Yeah, that would not be good.
Stock market would be irrelevant at that point, right?
Yeah, exactly. So we know that those chances are probably near zero, and if that happens, we might not even be around anymore. But and can go to $1 zillion, no. So we keep narrowing down to see, well, where do we think it's going to trade in what liquidity band. So first, we could take a look at where the stock's liquidity has been recently. All right, we could take a look at, well, what is the band it's been trading at? So we could take a look, let's say, historical data. All right, you could see, okay, up 1.6 here, it's almost unchanged, 0.4 up 2.3, down 0.7. So these are daily percentage changes, right? So just eyeballing them, we could eyeball them. We could see it's traded as much size 2.3, had a movement 1.6, down 2.3. We could see, what is, a lot of 2%, sometimes 0.5%. So when we look at volatility, we calculate it a little bit differently. We take log returns, but let's just keep it simple and just look at it from this. If we're just eyeballing it, we could kind of get a sense of like, potential ranges. Right? We could take averages, we could take, high, max downside, max upside, whatever. We could try to start estimating based on its recent volatility. Now, of course, that assumes that the next day is going to look a lot like most recent days, but that's a starting point. Now, you would want to consider, is today different than the most recent 20? Let's say we use 20 days of data, right? Well, if we're using 20 days of data and we're trying to create an estimate for the next day, a natural question will be, well, is the next day similar to the last 20 days? Is maybe tomorrow, if there's a Fed meeting, let's say, well, the last 20 days didn't have that, and a Fed meeting could create extra volatility. You need to compensate for that, right? If the next day looks similar to the last 20 days, then there's nothing to compensate, right? Then you're just using that. Or if the last 20 days had something, let's say this day in particular, August 5th, let's say that was a Fed meeting. Well, if we use the last 20 days, obviously that will include August 5th. But if we're not expecting a Fed meeting tomorrow, you might want to remove that data point, right? That data point might overestimate your volatility potentially, right? Because something happened that date that you know about, and you're not expecting it to happen tomorrow. So that data point may not be relevant anymore, right? So when we use historical data, there's lots, it's preparation of the data. You're looking at it, it's how you tag the data, preparing it. All that is important. But let's just start out, looking at the simplification of it. And here in the summary, what you'll see here is this graph, right? And this graph here, you see this red line, that's where the stock closed yesterday. So right now we're not open. This is all yesterday's data. Okay. So right here, one of the things we're looking at is, okay, we see where the stock closed yesterday. We see this blue line where the stock is trading. And what would be the expected range if we used the last 20 days of volatility? Standard deviation up and down, right? So if we use a one standard deviation up, one standard deviation down based on last 20 days volatility, where do we expect the stock to fall in, which range? So that's these green lines over here. These green lines, that's one standard deviation up, one standard deviation down. So you could see yesterday, the stock itself traded and finished above its one standard deviation move, right? So yesterday, it did break out of it and it traded above. Okay. So that's one way to take a look at the expected, if you're using that as the expected range. Could also look at the options, right? So the options themselves have a, let me see, I think it's under volatility here. Implied moves. So here, this is showing us the options expected daily move versus the actual move. So the options expected move is we could look at yesterday's closing options, right? We could look at, here you go. Let's take a look at this. Because keep in mind, the options are reflective of people's trading. It's reflective of the market's, let's say, the market's implied or expected move, right? Because if you have buyers and sellers reaching a consensus somewhere, then that's the market expected move, right? So if we look at, so August 13th expired yesterday. So the next day is August 14th. So you could see here in SPY, there's a daily, right? So this one will expire today. And based on the at the money straddle, it is implying a 1% move, $5.26 up or down. All right. So that's what the options are implying today within a range of $5.26 up or $5.26 down. Right. That if you bought the strat, in other words, if you bought the straddle, that means it has to move up $5.26 for you to break even. If you sold the straddle, it moves $5.26 and you break even. So that's the break even spot for both buyer and seller. Okay, that's why we call that the expected range, right? That's where the market's consensus, right? So now we could come here. Let's come back here under volatility, implied moves. And then the question may be, well, how well did the market anticipate the actual move? Was it right on? Like, was it, if the market consensus was 1%, was it always 1% the next day? Or did it tend to overestimate, or did it tend to underestimate? Right? Because then we could go deeper in there and start doing an analysis on it. So here's a graph. This is an SPY. Let me close this to expand this graph. So here's a graph that gives us a visual representation, visual analysis of the market's expected move the day prior, where it closed at, to the actual move the next day. And these bars here, you see the bars, they go up, down. That's the percentage move up or down, right? The percentage move implied by the options prices. In other words, if the stock, based on the straddle, if the stock moved up or down right to the tip of that, that's where the break even is. Well, of course, the stock could move either up or down. So when it moves up, what we did was say, okay, this is where what that actual stock did. If it moves up, we display it as a green bar that's going up. If the stock moved down, here we display it as a red bar with the bar going down below zero. And you could see that we show it overlapping the expected move. So just visually, we see yesterday, August 13th, that this green bar exceeded, went above the bracket, right? The expected bracket. It was up the stock was up 1.6%, but the straddle the day before implied an up or down move of 1.2%. So if you just sold the straddle the day before, held on to it to the end of the day, it would have been a loser because the premium that you collected did not cover the actual move of the stock. And if you bought the straddle, it would have been a winner. And that's how this is going back in time. You can see, I don't know what it goes, like 20 days or something like that. So you could follow the most recent history of the options daily expected move versus the actual. And let's now look at a table where it gives us the summary stats of this. This is the last 20 days, right? On average, the implied move, right? If we took all the implied moves, on average, it was up or down 1.2%. If we took the average of all the actual moves, up or down, it was 1.1%. So it's close if you're taking the averages, right? On a daily basis, you're not going to get it exact ever on a daily basis. But the markets are adjusting here and there, and it looks like if you averaged out the history, it's close, but it tended to overestimate a little bit. Okay, and using the last 20 days. What about the number of times that the stock under I don't want to say underperformed, but underperformed the straddle. Basically, it moved within the expected range, and how many times did it move outside that expected range? Well, here we see that days inside were 9. So 9 of these days would look something like this, where the stock move did not exceed the bracket. It was below. 11 days out of the last 20, the stock moved outside its range. So it looked like either this green one that I'm hovering over or this red one where the move to the downside was down 2.9%, even though the straddle was anticipating a 1.6%. Okay. And then we could, so these are the summary stats, and then we could see day by day, right? So this is a table showing the data that we see graphically. Right? So if you wanted to just look at the table of data, you could come down here and could see day by day, right? This is where the stock closed at. The move implied this was the move implied by the options as of the previous day's close. And this is the next day's move. And this just tells you, was it within range? So this one's no, because it was up 1.6%. While the implied move was 1.2. So that's another way to kind of look at, right, at the history of the anticipated range from the using the options markets versus the actual. And if you just want to see, well, of course, you'd have to have a daily, either you have a daily option like we do in SPY, or you would have to take the implied volatility and convert it to an implied daily move. But if we wanted to see for today, for instance, where did the options go out? We could go to this activity. And coming down here, this is that at the money straddle. And we could see here, this is what the implied move is, 1%, or in dollar terms, $5.26 based on the last price, right? So this is, 1.0, whatever. We round these to 1 decimal place, but this will be based on the actual. So we're close to 9:30. I think I'm gonna stop there.
Yeah, that was great. Thanks for the question. Awesome job, D. You have a great day, buddy.
Thanks everyone for joining.